Digging yourself out of debt. Steps you can take to become debt-free. Materials provided by Genesis Financial Management. We will focus on using credit wisely, the danger signs of debt, ways to cope with financial distress, understanding the difference between credit counseling, debt settlement, credit repair, and bankruptcy, the high cost of credit fees, how to maintain a healthy debt load. What's the deal with credit scores? They range from 300 to 900. The higher your score, the better. Good scores are hard to define. Factors affecting your score are your payment history, the amounts owed, the length of credit history, new credit, and the types of credit in use. How much in debt are you? Total up the number of creditors, individual debt balances, total debt balance, monthly payments for each creditor, and the total of monthly payments. Annual debt ratios and consumer debt ratios. An annual debt ratio is the consumer debt plus a mortgage or rent monthly divided by your take-home pay. Here's an example. 320 plus 720, which is $1,110, divided by $1,800, which is your take-home pay, equals 61.6% of your annual debt ratio. Over 40 to 50% recommended amount. Consumer debt ratios. That's your consumer debt repayments divided by your take-home net monthly pay. Here's an example. 390 divided by 1800 equals 21.6% over the 10 to 15% recommended amount. So both of these examples are over what is recommended. Red flags of trouble. Using cash advances to pay for everyday expenses or to pay for other credit cards. Spending more than 20% of your income on debt payments. Paying bills late. Being unable to make more than the minimum payments on your debts. Getting turned down for new credit. Consolidating loans without closing the original ones out. Pushing your credit limits. Not tracking your spending. Needing to open new accounts because you've maxed out the old ones. Using credit to buy things that you used to pay for with cash. Getting calls from bill collectors. Stages of credit difficulty. The early signs are when you begin paying late penalties or just pay the minimum due or you're a month or two behind. The later stages are when your bills are months overdue. They're difficult to pay the minimums and the creditors are making contact with you. The final stage of credit difficulty is court proceedings or pending court proceedings. So, in that stage, your wages are subject to garnishment, and secured items such as a car or a home can be repossessed or foreclosed on. Your creditors are not bad guys, and neither are you. Everyone has at least one rough patch in their life. You're not a bad person if you run into some bad luck. Keep in mind that creditors are not villains or unreasonable. They are people you owe money to. You like them well enough when you got the money from them. The only thing that changed is that you have not kept your promise to repay as agreed. They will try to collect what you owe within the limits of the law. Strategies to reduce your debt. Reducing your debt is easier said than done, especially when you are working with limited resources, but it can be done. The key is prioritizing and taking the proper course of action. Number 1, try to increase income. Adjust your tax withholdings on your W-4 form. Be a two-income household or work overtime or a sideline job. Increase child support or alimony if possible. Food stamps, SSI, TANF, and other public benefits may be available to you and they're there for a reason. Selling assets like a second car, jewelry, etc. Upgrading employment skills or job training programs so that you can get more income in the future. Charging adult children room and board. Use the tax benefits, earn income credit. Request money loaned to others. Develop barter networks like carpooling, childcare. Number 2, try to decrease. Trade in cars less frequently. Consolidate your phone plan. Use only no annual fee or low interest credit cards. Consider less expensive housing. Install energy saving devices or insulation. Lower settings on the water heater. Shop at consignment and thrift stores. Brown bag your lunches and snacks. Avoid vending machines. Bring food from home. Number 3, contact your creditors as soon as possible. Seek a deferment or reduce payments. With overdue payments, you can add them to the end of the contract. Be sure account is reported as current on your credit report. Can't versus won't pay. People having trouble but trying to work things out, and people who have not paid their bills and ignore their creditors. That's the difference. Number 4, credit counseling. Budget counseling at a nominal cost. On a debt management program, you must incur no further debt and surrender credit cards. Administrative fee charged for costs of repaying bills. They will only take on clients with the ability to repay their debt back. A number to call would be 877 202 9246, or you can go onto our website, www.yourgfm.org. You can get information on the phone to meet with a counselor face to face for advice or to discuss options. Always choose a nonprofit over a for profit company. Debt settlement. A debt settlement is an arrangement between a debtor and a creditor to fully satisfy a debt for a reduced payoff amount. Stronger medicine than a DMP. There are different notations placed on your credit profile, so be careful. Debt consolidation loans. Take out one loan to pay off a variety of creditors. You cannot borrow your way out of debt. This may increase your overall cost of the loan. You may pay higher interest rate than before, and you may consolidate debts previously interest-free, and there is a temptation to overspend again. It's not a good option if you have a spending issue. Number 7, bankruptcy Chapter 7, liquidation. It can take 6 to 12 months or more. It erases all obligations except child support, student loans, alimony, federal and state tax. You must undergo a means testing and credit counseling to determine eligibility. You surrender to the trustee all assets that are not legally exempt, and you don't file for small amounts. Bankruptcy Chapter 13, reorganization. The plan is approved by a court to repay all or part of the debt within 3 to 5 years using future earnings. Creditors may get at least as much as they would with Chapter 7. Debtors must live within the plan. Debtors allowed to keep property, make monthly payments to a trustee to pay creditors. This is best for those with steady income and equity in their home or car. Number 8, owing the IRS. Make contact with the IRS. Do not ignore them. Contact them well before the April 15th deadline. Explain your financial situation. Number 1 rule, penalty for not filing tax return is much greater than the penalty for not paying taxes. Late filing is a 5% of taxes for each month unpaid, plus interest for the first 5 months. Then it recaps at 25%. Late payment is 0.5% for each unpaid month, plus interest. The IRS accepts payment plans, but costs $100 to set up. Number 9, voluntary surrender. If you're unable to make a payment, you return the secured asset to the creditor or obtain creditor's permission to sell the asset. This saves on repossession fees, avoids repossession being listed on the credit record, and sometimes creditors will accept asset as payment in full. For a house, the term for voluntary surrender is a deed in lieu of foreclosure. Number 10, power pay, debt acceleration. Start by sending each creditor whatever amount was previously sent. As soon as you pay off one debt, apply the monthly payment amount to the remaining debt. Continue until all debts are repaid. The greatest savings generally occur by repaying the highest interest debt first. You can also choose to repay in the order of the lowest balance or shortest term first. You can do this with optional extra monthly payments or an optional one-time lump sum. Calendar shows the amount paid to each creditor. Credit card fees and traps. Once you sign the back of the card and charge a purchase, you are agreeing to the terms, whether or not you understand them. Before you use the credit card, understand the terms and conditions of its use. Credit card minimum payments are calculated as a percentage of the outstanding balance, usually average daily balance, typically anywhere from 2 to 3% of the amount outstanding. The lower the percentage required, the less you'll be required to pay per month, but the more a debt will cost you over time. Here's an example: $5,000 balance with a 17% interest rate. 2% minimum payment, $100 this month, $5,000 times 2% equals $11,304 total interest. And it would take 40 years to repay. Whereas if you were making 3% minimum payment, 150 this month, $5,000 times 3% would equal $4,296 in total interest, and you'd pay off in 18 years. So 1% really makes a difference. As you can see, the 1% difference costs $7,008. Low minimum, high cost. A credit card with a low interest rate and a low minimum payment can cost more than a credit card with a high interest rate and a higher monthly payment. Assume the $5,000 balance at a 15.9% rate and a 2% minimum payment costs $9,538 total in interest and takes 41 years to repay, whereas a 19.98% rate and a 3% minimum payment costs $5,858 total interest and takes 21 years to repay. Pay more than the minimum. When you send in more than the minimum required payment, you shrink the outstanding balance, you reduce the amount of the interest owed, and you cut the time of your debt. Small payments add up: 17% interest and a 2% minimum. Here's a $5,000 balance. Extra 10 cents a day will save you 11 years and $2,257. An extra quarter will save you 19 years and $4,148. An extra dollar a day will save you 30 years and $7,624. And here's a $10,000 balance. An extra 10 cents a day will save you 12 years, $3,060. An extra quarter a day will save you 20 years and $5,970, whereas an extra dollar a day will save you 35 years and $12,615. Interest savings can exceed the amount originally borrowed. Late fees are increasing. Consumers have less time to pay bills. Leniency periods are reduced or eliminated. Earlier payment posting deadlines. Buyer beware. Some credit cards with low interest rates charge high nuisance fees. Over the limit fee. Fee charged for exceeding the credit limit, even though the creditor approves the purchase. Charge monthly until balance drops below the limit fee. Transaction fees. It's a fee charged each time a credit card is used. Here's an example: 50 cents per charge. Most common transaction fees are for cash advances and balance transfers. Penalty APRs. High punitive interest rates. Lenders profit from borrowers' mistakes. 2000 survey of 100 credit cards. Average penalty APR was 22.84%, 8% higher than the average APR for purchases. This can be triggered by just one late payment. Common penalty APR triggers: minimum payment just 1 day late, 2 consecutive minimum payments, 2 late payments within a 6-month period, late payment to another creditor, account balance over the limit, change in cardholder's financial situation. Tiered pricing. It's a risk-based interest charges. Range of possible APRs quoted. One example in the 2000 survey was 7.99% to 20.24%. APR determined by the applicant's credit score. Lower scores, subprime, pay higher APRs. APR unknown until consumer gets the card. Cash advances. Cash loans from a credit card. Expensive way to borrow money. There's no grace period. Cash advance transaction fees. Higher APR than for purchases. You may use a different method to calculate interest. And punitive policies. Inactivity fees for not using credit card within specified periods, using credit card less than specified number of times, charging less than a certain dollar amount, penalty for paying a bill in full on time. Targets for those penalties are convenience users who do not pay the interest, prepayment penalties. Look for a credit card with a regular non-teaser APR of 15% or less, a grace period of at least 25 days, a late and over limit fee of $20 or less, no annual fee, no penalty APR or rate less than 20%. Credit card disclosures front and back. Front, introductory or promotional APR, advertised credit line, special offers and privileges, application deadline date. Back, Schumer box, required by law to include the actual APR after the introductory period, APR formal if the rate is available, length of the grace period, amount of the annual fee if any, minimum finance charge, transaction fees, method of computing balance for billing, late payment fees, and over the limit fees. Online credit card resources. Truthaboutcredit.org, its information and balance payment calculator. CreditTalk.com, user-friendly credit card information. bog.frb.fed.us/pub/shop, it's a semi-annual credit card survey result. Consumer-action.org, it's an annual credit card survey result. Credit repair scams. Bad credit, no problems. Erase bad credit, 100% guaranteed. Remove bankruptcy and liens from your file. Repair and rebuild your credit file. Create a new credit identity legally. Credit repair companies wear many disguises. Many of them call themselves credit advisors, credit rating correction services, credit consultants, credit doctors or debt doctors, credit loan consolidators, credit clinics. Credit repair can't be done. You cannot legally erase what you owe, however, paying off old debt and maintaining a positive payment history can improve your credit score. Repair bad credit takes time and effort to fix. Reporting negative information. Late payments will last up to 7 years from repayment due date. Bankruptcies, Chapter 7, up to 10 years from the filing date, and Chapter 13, up to 7 years from the filing date. Tax liens, 10 years from the final payment. Know the warning signs. Advance payment required. Legal rights not explained. Advice to create a new identity. Advice to file frivolous disputes. Credit report. Review for accuracy every year and before making an application for a large loan. You can go on to annualcreditreport.com, creditkarma.com, and quizzle.com for your free annual credit report. Questions, comments, experiences? For more information on dealing with debt or to make an appointment with an accredited counselor, you can call us at 877-202-9246 or visit us at www.yourgfm.org.